Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's take a look at something I've discussed in many videos, just not in isolation, which is seasonality. And before you click away, there's some fun charts at the end I'll go over. I think most of us are familiar with seasonality just based on living life on Earth, revolving around the sun. We're familiar with seasons depending on where you're at weather-wise in the world, but for markets specifically, a decent definition would be the historical tendency of an asset to perform better during some periods and worse during others. And this can be as little as, time-wise, seconds throughout a day. Legacy, for example, plus or minus 30 seconds from the open and the close each day. The crypto stuff relative to the ETF, so when those flows come through, we've certainly seen that on the open and the close, plus or minus an hour during the weekdays. But the calendar can be highly, highly important because that sort of sets everybody's expectations. Is it spring break? Is there a holiday on Monday? Is it a long weekend, right? Do I need to adjust and shuffle my risk profile based on the calendar? When are asset managers generally making decisions? Are they making decisions a week before Christmas? A week before other popular holidays? Probably not, right? So that tends to shift things around a little bit, potentially, depending on what those asset managers are looking at. Taxes, obviously a major seasonal effect, especially if the previous year was better or worse. We certainly saw that with WGMI comes to mind. A lot of this crypto stuff where into 2023, there was a lot of tax loss harvesting. And then post 2023, when the calendar rolled over, it was a different story. Now that isn't necessarily repetitive based on the date, but depending on the behavior of the market, it's safe to say you're going to see more tax-related selling if the market is good or bad in the previous year, right? There's also earnings season. There's corporate buybacks. This is all legacy specific. There's also the 401k passive DCA, biweekly stuff, paycheck DCA on the legacy side. That's starting to creep into Bitcoin a little bit. There's various companies that'll help you, River, Unchained, others do this DCA type activity, Kraken. Ultimately, we want to unlock that for Bitcoin and the ETFs, but I'm sure you could isolate when those passive funds are most likely to buy and see some sort of seasonal effect. Whether or not it's important, whether or not it's big enough to trade, probably not. Is it measurable? Probably yes. Whether obviously a massive one, again, we revolve around the sun every year, right? For specific commodities and crops and planting, agriculture, there's going to be a massive seasonality effect. Oil and gas, dependent on cold versus warm climates, summer, winter. There was a massive concern last year for potential seasonality effects with nat gas supply concerns in Europe, and the winter was super mild, right? But that those expectations and what may happen certainly affects the market because you either have to hedge, or if you're a speculator and you know about El Nino and you're looking at the cocoa market, things happen, right? That is a hopefully never to be seen again type of out of season price action based on weather, right? So you definitely have to pay attention to that stuff if you're trading commodities more so than businesses themselves. But crypto is also event driven a lot. Most of those events don't repeat, but halving is one of these events for Bitcoin that does repeat every 4 years. Whether or not the halving effect will always be the same is, of course, up for debate, and we're living through that. We will see what the halving effect will be. I have a chart on that at the end here. But it certainly affects expectations of the market. It certainly drums up a narrative. It gets people talking and thinking about how Bitcoin is different than every other asset on the planet. And generally that has a bullish effect. It has historically had a bullish effect. Time zone's another big one that I think a lot of people talk about maybe in passing, but again, unique to the crypto markets, 24/7, anywhere in the globe, depending on, is Asia awake? Is Europe awake? Is Singapore awake? Is New York open happening, right? These are all certainly measurable effects you can see with trading, but you can also see it on chain. You can see who's moving coins when. You can see when the fees rise throughout the day, throughout the weekday versus the weekend. I'm thinking of an ETH chart specifically for that, but those things are all important. Are they worth trading on? Most people just ignore it, which is fine, but some people can certainly get edges on which time zone is awake when. Is that a leading indicator for New York if Asia is selling, right? New York session, that sort of thing. Because of having flows to and from the miners have some sort of seasonal effect. Now they've sort of destroyed that by having a Bitcoin treasury, but once again, it's relative to halving, right? So if they're bullish on halving, they will accumulate Bitcoin and hold it. If it's a bear market and they're smart, they will sell the BTC, right? Marathon, for example, holds through and just holds everything, which, okay, good for them. Holds most everything, rather. They don't hold everything, but because of the ETFs and the flows, we may see this increased coupling with legacy, and we're already starting to see it. Not necessarily on the price aspect, but on the seasonality aspect, right? If we have a holiday, it's a long weekend, or just a weekend period, we've certainly seen a decline in volume, a decline in price action throughout the weekend. So most of the action tends to happen lately during the weekday. Obviously, if there's some geopolitical event on a weekend, then we're the only ones open. So people are going to be trading BTC and panicking. But for the most part, most of the volume, most of the action, for Bitcoin at least, has been occurring on a weekday. Now, there's also something for alts I guess you could watch would be exchange listings. This is hard to trade on per se, but I'm sure there's a relative seasonality effect with when was the token listed, and then plus or minus 5 days from that listing. I'm sure you will see, as you usually do on some exchanges, buying before the listing and then selling immediately after, right? In the description of the video, I'll put in some more interesting articles. These are worth reading just because you may not have necessarily thought of certain cyclical patterns in a trading way versus a livable human experience. And it's great that we have taxes and halving in the same week because, this is a great example of the seasonality effect for both of those things. Taxes certainly have a more immediate effect relative to halving, but both of these are periodic, repetitive, predictable, right? So that does affect the market. We'll also add this Investopedia article because as silly as seasonality might seem, people certainly do use that for trading certain commodities, trading indices. The equity clock, I'll get to that in a second. That chart I see basically every day on Twitter from FinTwit, legacy people talking about seasonality. The saying sell and make and go away is a stereotype of seasonality based on historical underperformance from May to October. October to the end of the year being important, and we'll look at that with charts, but this is one of the reasons why I think Bitcoin and crypto in generally does really well in Q4, especially alts. Alts do crazy good in Q4. But we have that additional stereotypical seasonality, self-fulfilling prophecy tailwind to help us in Q4. A few other articles I'll throw in there too, but this is the S&P 500 seasonality chart, and it's the past 20 years averaged out every day. And again, from May to October, the returns generally plus or minus 0.5%, whereas you can expect 8% on the year. You certainly don't want to miss the October low to the end of the year. And March to May, generally a pretty good period for the S&P. You can also measure this as deviations from expected seasonality. Why would that be happening? Is something broken relative to this year against the average? That sort of thing. The Q is very much the same. It's basically been up and to the right for a lot of this stuff, averaging, we'll say 13% a year. Drawdowns are going to be different. Volatility is going to be different. But once again, this May to October period, and for the NASDAQ, it's a little bit different, right? For the NASDAQ, it certainly looks better. And again, October on out looks great. You can also find these charts today versus the next year. And again, this is S&P April 16th on out. To me, it looks like a pretty good low. Maybe we come back in May and we revisit current levels on average. But May 16th, thereabouts, May 20th, whatever it is, tends to be the low for the rest of the year based on seasonality. None of this is a promise, obviously, but roughly gives you a roadmap for expectations if we are to be in line with a typical year in the stock market. You can, of course, tease this apart and look at election years versus non-election years. You can look at, is the incumbent running versus new people on the ballot, that sort of thing. I see a lot of that as well. But just averaging out the past 20 years, September's usually awful. And from here to the end of the year, past June, it's kind of been clear sailing. So June to September, October to January is how I would read that on seasonality. Now, how do you trade against that is the question, right? I don't think this can be the only thing you trade off of, but there's certainly benefits to just knowing that, yeah, September's usually pretty bad, right? And that's doubly so in Bitcoin. Wake me up when September ends, very much a thing. But I also don't want to be out of position on October 1st. On October 1st, I want to be fully invested and ready to go, because whether we like it or not, most of the time, Q4 is very, very bullish for all markets. And that's certainly an election year this year. So we'll see how bullish we can get. For some reason, whenever I think about seasonality, I always think about the Farmer's Almanac, and just funny that, the cicadas are even a seasonal effect, right? This year it's a double brood. So the middle of the country is going to have a lot of fun with all the cicadas coming their way. Before I get into the rest of these charts here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. So looking at Bitcoin here, I'll look at the daily seasonality, because April 15, 16, historically, over the past decade, is not bullish. It's actually very, very negative for Bitcoin. For most people, if they have Bitcoin in their portfolio and they owe taxes, they'll probably sell it. Now, for people who, like me, who are mostly Bitcoin denominated, that's the last thing I'm going to sell. But for some people who have altcoins or have Bitcoin like on the periphery of a portfolio, they may trim that to cover taxes. The Bitcoin chart, though, still looks fine on trend. It's above the Kijun, barely hanging on there on the cloud. I still really don't like this triple top potential. And if it breaks down, very likely we see mid to low 50s. That would be a bearish edge to edge on the daily. We've had these in 2023 where they weren't necessarily the end of the world, but we did still fulfill what I would consider, the bearish trade. It might take a while, it might get noisy, and you just got to plan accordingly, right? So the technicals would certainly favor 56 if we close inside of the cloud at any point here. But this is recoverable. It's just, I think right now it certainly leans more bearish than bullish. I've talked about these quarterly seasonality charts quite a bit over the years. Definitely where I first understood this idea of like Q2, Q4 for BTC on the median there. Q3, Q1, less bullish most of the time. Now over the past 2 years, we've sort of broken that seasonality trend and had a bullish Q1, and we may have a bearish Q2. It's only 16 days into Q2, so who knows? But things certainly change over time. The more integrated we become with legacy, things may change further. All the more reason to, not take seasonality completely to the bank and use it maybe as an additive tool rather than the only tool. Looking at Ethereum, for the most part, the first half of the year has been where the bullish performance tends to happen. So to see Q2 already quite negative, again, only 16 days in, that's not good for ETH as far as the expectations for the rest of the year, which are much more muted than Q1 and Q2 generally. Now, of course, we can have positive quarters regardless of seasonality, but seasonality is certainly more favorable towards Q1, if anything, and then sort of fades the rest of the year. Whereas Q4, what I think is happening here is that, Bitcoin leads, and then Q1 outperforms because ETH is sort of catching up as Bitcoin's flat or declining slightly. But the biggest gains for ETH may be behind it this year already if this quarter doesn't start to pick up. Looking at the monthly returns for Bitcoin, May's typically negative, April positive typically, but we rarely see a full bullish 3 months of Q1. So this is certainly out of the ordinary. And there was many people coming into April looking at the previous 7 months and asking, can we realistically have an 8th positive month? Have we ever done that before? How often have we done that, right? It's pretty rare if we've ever done that before. So that's certainly something else to take into consideration just based on the calendar. And then I mentioned September, but August as well. Just horrible months. August, September, generally very, very bad. And because those months are historically bearish for us, I think that's why it really sets us up for an extremely positive October. October and February being tied for the most bullish months by number, October leading the percentage. So again, seasonality would suggest, do I want to be short in October? No. Do I want to be in cash in October? No. I would rather be fully invested and ready to go. So that may mean jumping out in Q3, definitely avoiding September, most likely, avoiding August, and just preparing for October. So it's not so much sell in May and go away for Bitcoin. It's sell at the end of July and go away until October, because historically August, September ain't it chief. And if we look at the daily returns for Bitcoin on the 15th and the 16th, average and the median are certainly not bullish. And on this day, April 16th, I'd have to go back and check, but it's definitely an outlier on how negative April 16th is. We generally have this lull in liquidity because instead of having bids on the book for most people, they have just paid taxes or are in the process of paying taxes, are moving money around, and that's when the market's going to be most vulnerable to people taking profit or other bearishness generally, right? So I don't think this is anything crazy to see even today be quite negative. The good news is 17th is typically quite bullish. It's only had 2 negative days in 10 years on the 17th with a pretty high hit rate there. So look, it's not all doom and gloom all the time. You know, there are times when back-to-back days can be pretty interesting based on seasonality. Putting together a similar Bitcoin chart to that equity clock website for S&P using Bitcoin price action, price data on TradingView since 2012, we're certainly ahead of the average seasonality. And again, you can sort of pick out August, September into October, really nothing there historically. That is like the doldrums of the year, definitely, along with the beginning of the year. January generally is not a great month. February into May, pretty good. Again, the seasonality lull based on taxes, you're kind of seeing that. I would argue it's tax-based in there. May to August, generally pretty good. A little bump in the road in June. And then again, October, I mean, that's where you want to be. October to December is historically where a lot of the action happens towards the end of the year for Bitcoin. For ETH, you can see that front half of the year seasonality effect quite clearly, I think, here. You know, the back half of the year, June onward, is kind of a nothing burger relative to the first 6 months of the year. So to see ETH underperforming this much already, the average seasonality, you know, I could have screwed up these graphs. That's always a potential here. I think I did this right. In any event, ETH is certainly underperforming seasonality, and that isn't to say it can't do well later in the year. It's just, you know, historically this is ETH's time. Now, of course, there's a lot of event-driven ETF expectations or lack thereof that's going to move this chart around this year, and maybe later on in the year there's a catch-up trade here, and you could say, well, based on seasonality, let's say we're negative for whatever reason on the year, sometime in June, July, you could say, well, based on seasonality, I want to be positioned for price to potentially snap back to expectations. That's certainly one way to look at it if you are bullish ETH. I was going to use Ripple as a control, but I just threw on Litecoin because a lot of that data was also there, 2014 to present. And again, most of the actions really from April to August, August to mid-October, and then decently well towards the end of the year. But if there's enough data for any of these coins, you can find a similar type of seasonality pattern. But clearly, things tend to do better April onwards, Q2 onwards, and October onwards for something like Litecoin. And then if we look at Bitcoin plus or minus 400 days relative to halving, you know, you can slice and dice this a bunch of different ways. You can look at the cycle low, you can look at the cycle high. If we just normalize this for 400 days plus or minus, I threw out 2012 because it's quite an outlier. The average includes 2012. So I would say that's the most optimistic path, would be including 2012 in the average there. But we are pretty much in line with 2016 and 2020, I would argue. We could say plus or minus here or there on percentages, but based on just days relative to halving, we are right in the wheelhouse. And we have got halving this week, of course. And much of the gains happen months later after halving, right? So this would bring us early Q3. And then realistically, again, are we going to do well in August, September because it's post-halving? We might. I doubt it, but we might. But that's something else you can also look at. But this very much is lining up to me like a Q4 2024, Q1 2025 bullish halving effect. There's plenty of fun stuff other than this to look at with seasonality. People have been getting into the moon charts and the cosmic stuff, lunar charts. I don't know if you can seriously trade off of that, but some people certainly do. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.